Good morning. Welcome to the public kickoff of the 5th Annual Aspen Leadership Forum on Retirement Savings. I'm Karen Biddle-Andres, the Director of Policy and Market Solutions and Project Director of the Retirement Savings Initiative at the Aspen Institute Financial Security Program. We're so glad to have you with us today, wherever you are in the country or in the world. And most importantly, we just want to extend our well wishes for you and your loved ones. We hope you're safe and well during this continuing global pandemic that doesn't seem to be, certainly hasn't abated yet. Before we get started today, I'd like to thank the organizations who fund the Aspen Leadership Forum on Retirement Savings. A sincere thank you to our partners at AARP, JP Morgan Asset Management, and Prudential. And a little bit about the forum. You'll hear more in a moment from Rademacher and Debra Whitman, but I thought I'd share a bit of context from my perspective. This is my 3rd year leading the forum, and what I've come to understand and what we hear from so many of you about what you value about this event is that it is more than an event. It's really a community. It's become a community of diverse leaders, folks from all different spots and vantage points in the retirement savings system, from academia, nonprofits, fintechs, asset managers, record keepers, lawyers, advocates, and more. And every year this community has expanded and has diversified, as has our shared understanding of the multiple ways forward toward the inclusive and effective retirement savings system that Americans need. I'd also like to thank the members of our advisory group for the Leadership Forum, who provide such valuable advice, insight, and their time throughout the year. It is really, it's deeply sad that we can't get together in person with these leaders and with all of you. But there is a silver lining. We're gonna lean in hard to the opening that this has provided to us, to this virtual way of meeting. We get to open up this dialogue and this community publicly and invite all of you to join and share your thoughts and perspectives as well. So today is the public kickoff for the 2021 forum. In the next few months, we'll be hosting a set of private virtual dialogues in which we'll be gathering, 15 to 20 leaders from our community to really dive deep into some of the specific challenges facing our system and the solution sets for them. So from now until the end of June, we'll be hosting dialogues in which we grapple with how to expand access to automatic enrollment, what are the specific things we should be doing, how to make retirement savings more portable, how to strengthen cash flow from multiple sources during retirement, and critically, how can we design a retirement savings system that is a net contributor to closing the racial wealth gap? Retirement savings is second only to home ownership as a source of household wealth in the US. And I think there are a lot of us who see a lot of potential, maybe even an imperative, for us to make retirement savings part of closing some critical gaps that clearly exist. As we do every year, we will publish a rapporteur's report that summarizes the themes of all of the dialogue that takes place at the forum, so that everybody can get a view or a window into the themes that we discuss together. So, all that said, let's turn to the agenda for today. In a moment, we'll hear reflections from Rademacher and Deb Whitman as they reflect on where we are after 5 years of dialogue at the forum. This was meant to be a 10-year dialogue. We're halfway through, so where do we stand? Next, a terrific group of leaders will discuss what they think 2020 has revealed about retirement savings and what needs to happen next. From noon until 1, we will take a break. We'll have an hour break. During that break, you're welcome to log out of the Zoom, just like you would a regular Zoom meeting, and you can come back in for the afternoon session using the same link that you used to log on this morning. We'll reconvene at 1 p.m. It won't be me as your tour guide. It'll be my colleague, Tim Shaw, serving as MC. He's the Associate Director of Policy here at the Aspen Financial Security Program. Chairman Richard Neal of the House Ways and Means Committee will share his legislative priorities for retirement policy for 2021. And then finally, we'll end with a discussion that seeks to answer the question, do we already have the puzzle pieces we need to put together the retirement savings system Americans deserve? And then our time together will conclude at 2:30 p.m. So that's our day together. Now some housekeeping notes for you. We welcome all of your engagement and your connections being made in the chat. We will be pushing out some links to key resources and research as we go through the day. We would ask if you have questions for speakers, please do use the Q&A function, the Q&A feature at the bottom center of your screen. We are live tweeting this event with @AspenFSP, and we invite you to join that conversation by following and using #AspenFSPLive on Twitter. Okay, now before I invite Ida and Deb to join me, I want to give you a sneak peek at something we have published today. So at the 5-year mark of the forum and at what feels like a real moment of opportunity for some meaningful evolution of our retirement savings system, we decided to field a survey to this diverse community of leaders. So our goal in fielding what we call our expert survey on retirement savings was to gauge the level of support or lack thereof for a variety of different changes and potential solutions that have been discussed over the past 5 years of the forum. So we fielded a survey between December 2020 and March of 2021. Thank you to all of you who shared your perspectives and filled out the survey. We received 182 responses across a wide range of sectors. We're really thrilled with the diversity of the list. And I'd especially like to extend a thank you to our partners at DCIA, the Defined Contribution Institutional Investment Association, for their help in fielding this survey to their membership. And throughout the survey, which I know my colleague Saurabh just posted in the chat, we often break down how our respondents answered the questions by sector, in case it's helpful. So let me just dial you into a couple of the findings that we found really compelling and interesting as we think about the conversation today and as we think about some of the private dialogues to come. So at the top line, across all respondents, the top priorities for ensuring retirement security are: 1, expanding access to workplace retirement savings programs; 2, expanding access to automatic enrollment specifically; and 3, ensuring the solvency of Social Security. So thinking about the way that those two, retirement savings and Social Security, kind of go hand in hand, clearly a priority. We were really struck by the degree of support for a national framework for retirement savings, with 77% of all experts surveyed supporting federal policy requiring that all workers in America have access to a retirement savings program. Similarly, a majority of respondents emphasized the critical nature of emergency savings within a national approach to retirement savings. There's more here, but I'll direct your attention to the final line, racial equity. We're looking forward to exploring in the years to come with many of you the final highlight that most respondents believe that our retirement savings system has contributed to multiple racial wealth gaps. The question, of course, is if that's true, how we can change that. Again, focusing on the way that retirement savings features and household wealth, there's a real opportunity here for us to design for racial equity. And we know many of you are thinking about that as well. In addition to the topics that I've touched on, the survey delves into solutions for automatic portability, lifetime income, the question of a refundable savers credit, and critically, the role of the employer in providing retirement savings. So we invite you to download and explore the full set of data on your own. Now, without further ado, I'd love to invite our first 2 speakers to our Zoom stage. Please turn on your cameras and microphones. Deb and Ida, gosh, this is so much easier in a live setting when I can literally call you to a stage, but anyway, I guess we'll live with the virtual version. Ida Rademacher is Vice President of the Aspen Institute and the Executive Director of the Aspen Institute Financial Security Program. And Debra Whitman is Executive Vice President and Chief Public Policy Officer at AARP. Ida and Deb, I'm so looking forward to hearing your discussion. And Ida, I'll hand it over to you.
Thanks, Karen. Thanks, Karen. Hi, Deb. Good morning.
Good morning, Ida. I'm so excited to be here with you. You're 5.
I am too. And I want to thank Karen and the whole Aspen team for all of the careful work to put together as much of a community feel this year, even though we're remote, for so many of the folks who have signed on to join us today. We get the fun part of this conversation, Deb, which just feels like icing on the cake for me, to help folks. It's very rare that we have the forum is usually inward facing. It's a set of individuals we've been trying to curate over time. These individuals who both have leadership and decision-making power on the future of the system, and also have this personal passion for making this issue so important. But we get to reflect on what we've done for 5 years, why we started this to begin with, and kind of where we're going. So let me just turn it over to you, and maybe you get to tell the origin story of the Leadership Forum on retirement savings, and I'll chime in a little bit.
Yeah, please add to the origin story. But I've been working on retirement savings for decades, and I think I had a huge frustration that this really important issue, which retirement savings takes decades to build, wasn't going to really meet the needs of the population, but till after the baby boomers retired. Like, we should have done this decades and decades ago. And so out of that frustration, I sort of thought about, well, other countries are able to do this, and how are they able to be forward-looking, where we tend to only deal with political issues in the crisis situation. And I spent a decade on Capitol Hill, so I understand that there's a lot on people's plate and crises focus the mind. But we look towards what they've been doing in the UK with gathering people together at Glen Eagle, Scotland. And I talked to David John, who works now with AARP and have been attending those. What did they do? How did they do it? What were the great insights? And I think the insights were building trust across sectors, creating a shared set of facts, looking at what works and real data. All of those things we've really taken forward with this process, but also having a convener that all sides feel comfortable with. And that's why working with you, Ida, and Karen, and Jeremy in the first years, and really leveraging Aspen Institute's convening power, but stature at being problem solvers without having a dog in the fight has really been excellent. And then the mix has always been important. I think Karen talked about, this community of diverse leaders. And I think both of those points, community, which it didn't necessarily start as, but diverse is certainly true. And we've brought together everything from academics to record keepers to fintechs, asset managers, nonprofits that represent individuals like ourselves, experts on pensions, experts in state and federal government, global examples from, I know we've had people from New Zealand and Australia and the UK, all having conversations around what are the solutions, what are the problems, and then what are the solutions, and then how can we find mutual agreement. So that's as I see the origin in the mix, but really want to thank Aspen for being a leader. And I also want to thank, you've got brought together a strange bedfellows of folks that are sponsoring this. So initially it was AARP and JP Morgan with Ann Lester. Now Prudential has stepped in with Phil Waldeck. So it's not your typical one side or the other conversation, but it's been a real partnership throughout.
Yeah, I agree. It's been, when I think about the 5 years and what has been accomplished, I mean, obviously, I wouldn't say that it all happens because we have this event once a year, plus the community that's being built. But I do think that there has been some real movement, some real shift because of the way that we've invited all the elephants into the room, as it were, and gone ahead and been okay with, even though understanding there's a lot of difference in perspective and a lot of different choice points for the future of policy, what is the defining characteristic of why people choose to be in this room is they do think this needs to be a national priority to solve for. financial security in the long run for households. They do understand that we're not going to get there without a really robust airing of the issues and the options. And everybody's committed to staying the course. And so for others who are just joining for the first time for this public facing conversation, we want to hear from you. We want to engage in that conversation. I think there's been some movement in the last 5 years. I mean, let me take it back and ask you a couple of things. We talked about a little bit about this, reflecting on the work of it. 5 years ago, federal policy was really at a stall in many ways, and you all had been really focusing on this emerging movement at the state level. So that feels like you can talk a little bit about how that's shifted. I also, well, let's talk about that first, and maybe we'll accelerate our conversation a little bit because I don't want to go over for us. But I think in terms of state plans, I think in terms of convergence about public and private sector agreement on what needs to happen, those feel like two really meaty things that have changed because people have changed.
I agree. And, yes, we can't take credit for this once a year meeting, changing the entire environment, but I think it really has helped because in any forward momentum, if the winds are in your face rather than the winds are in your back, it makes a huge difference in the speed you're going to move. And so, when we started our conversation, there were a few states that were looking at retirement savings plans that covered all workers whose employers didn't offer one. It's really hard to save if your employer doesn't take money out of your paycheck every month. You have to figure it all out, and it's a complicated system, and you've got other things to do with your money. But that automatic deduction makes a huge role across your life. And so the states were stepping in places that employers were unwilling or unable to do so. We started out with a few states. Now, Ida, we've got 14 states, including one city, who have passed legislation, and we've got another 16 states that are considering legislation. So with 30 states moving in just a few years, that's not just wind at your back, that's, gale force helping. And that means that a lot of the institutions and organizations and business community that might have had hesitations have really stood back from opposing, or even now are leaning in to helping support. And it's also shifted so that this conversation is a bipartisan conversation. Just yesterday, Illinois, which was one of the early states to pass legislation, decided to expand theirs to cover more firms, including ones of smaller sizes, and to allow auto escalation. So even what we're seeing, the states that have done something are now doing it better. But it was 106-2. In the House was the vote. And so, really seeing these conversations not just bubble up at the state, but race forward. And we're going to hear from Wisconsin Treasurer to say, okay, retirement savings, and I think we'll talk about this in a minute, retirement savings is one issue. Well, what about all of the other issues we need to think about as well? Emergency savings, those types of things. And how can we use the platforms and conversations that we're having to even do more?
Yeah, I see Courtney, Katie. It's just great to see everybody's chatting, popping up in the chat that are leading this work at the state level. I would say two other things around this, and this is where I get to give credit back to you, because the way that you have supported the forum has been about allowing us the ability to do the work of, scouring the country to find additional kinds of organizations and leaders who haven't really been invited to be a part of a retirement policy conversation, who feel like it's a very technical space once you get in one of these rooms sometimes. And so I don't feel ready, or it's not a thing, or I'm really worried about these, for most of the workers we care about, these are the short-term financial insecurity issues are such a pervasive driving issue of precarity that it almost feels like a luxury to talk about retirement. And we know that's not true, but we've got to figure out how to invite folks who care about other facets of people's financial lives to be part of helping to shape the future of a retirement system if it's going to work for everyone. and to bring this community along to agree that the solving that we have to do now is for everyone. So when I think about the ways that the forum has also kind of put its finger on the pulse of where the field needs to be going, I think part of that has been combining the emergency savings conversation with the retirement savings conversation. You were at the very first meeting where the people who wrote the financial diaries and Fiona Gregg, who's going to be facilitating moderating the next panel, they had never even met each other, and they were both doing this amazing research on income volatility. They hadn't met each other, and they certainly hadn't met the retirement community. And you were at that meeting and where these things really came together, so we did that work together. We did the work of bringing emergency savings, student loan debt, and even last year, the other public event for Alphers was a very spirited conversation around racial equity and retirement. Before it was before the world shut down, it was before last summer's kind of reckoning with racial inequity in this country hit that crucible moment with George Floyd. And we were already saying the future of wealth has got to include a priority around retirement savings as well. So I feel like those things moved. But maybe for you, the thing last year that you really have said a little bit about was how I think you said your jaw dropped about what level of private sector support there is, not just for national solutions. And I wonder if you could say a little bit about that story, and then we'll look at the future, and then we'll wrap up a little bit.
Oh, our time's going way too fast. I can talk to you all day. And thank you for bringing up AARP's support of this is really to bring other nonprofits, community organizations, and individuals to bring those voices into this room. And I've learned so much from them. And I think they have really influenced the conversation. We wouldn't have been talking about emergency savings as part of retirement savings, and what you'll hear in the Wisconsin plan is to include both if we hadn't done that. But you're right. I think what my jaw dropped was the session that you had 1 year ago, was the public session where we had BlackRock, State Street, JP Morgan, and Prudential. And the representatives all said, you know what, we need a national retirement savings plan. And the next person said, oh, of course we do. And the next person said, yes, we do. And to have that agreement in the private sector as a statement of fact was huge. And I raised my hand and I asked a question to the panelists, like, what, this seems newsworthy, what changed? And they said it was this conversation that we've been having with Aspen Institute and you all, that now we really understand the issues. We have that set of facts, and you've convinced us. It's good for business, it's good for people, it's good for the country, and we really have to get this done.
The first forum 5 years ago, everybody has a mic. The forum is truly a forum. There are conversations between you and I or lots of other people, but then most of the conversations in the round, people just standing up and throwing in their 2 cents. And when I say throwing, like, there was some throwing almost at the first one. There was not a lot of convergence around this idea that there was a need for federal policy to really think about all workers. So I count it as a win, but I'm just mindful. And honestly, just pointing back to the survey that Karen teed up, 77%. But when we disaggregate that 77% support, 74% of private sector, 67% of private sector, 93% of nonprofit and government were in that space. So this is really coming a long way, and we need to go further. So let's just turn our sights a little bit to the going forward piece. We do pride ourselves on trying to put our finger on the pulse in this of what do people need to be paying attention to, both the opportunities and the issues in the next year. So as your kind of lightning round wrap up, what do you hope we get to this year, both today and also in the private dialogues that go forward?
So I'm excited we've moved so far on coverage to making sure that all people have access to save, but that's only one piece. It needs to be adequate. We need to look to make sure particularly low income savers have incentives to save. We need to make it portable so people don't have lots and lots of small accounts that they lose track of or spend down. We need to think about retirement income. Emergency savings can be a component of plans. And again, you're going to hear about that shortly. And more, I think, I think we have not done, and I'll just be honest about this, I think we started the conversation about racial equity in wealth, and particularly in retirement savings. We need to do a lot more there too.
Yeah, I fully concur. I think that the teaser conversations we have lined up, both coming right after with this first panel and this afternoon, will kind of help to put a finer point on some of the directional markers you just laid down, Deb. I think we'll wrap it there, just knowing that the conversations are ripe. The urgency for us to think about retirement savings and retirement security holistically in the course of somebody's financial life, and as a fundamental part of how we recover better, is going to be incredibly important. So we invite more questions in the chat, more dialogue, dig into the survey findings, and Deb, hopefully before too much longer, I'll see you in person.
I would love that. And Ida, just thanks to you and Karen, Jeremy, your entire team. They've been incredible to work with and to amplify all of these issues. So thank you for the partnership.
It's our pleasure. I think if the reason this has leadership in the title is because I think Aspen's whole role here is to try to continue to support, diversify, and equip leaders with the information and the relationships to really drive change. So we can go there next. Let me turn this back over to Karen, and she can introduce the next panel. Thanks again, Deb. Thanks to AARP and to JP Morgan and Prudential for all the support for making this happen. Karen, off to you.
Great. Thanks, Ida. Thanks so much, Deb. I think no transition is really necessary. I think that provided all the context we need for where we've been and kind of what's next. So I'd like to go ahead and turn to our next discussion and the question of 2020, what changed or what was revealed about financial life in America and how that impacts retirement savings. And so I'm super excited for this next group. I'd like to invite them to go ahead and join our Zoom stage by turning on their microphones and cameras. And as they do so, I'll go ahead and tell you who's joining. So I'd like to welcome Fiona Gregg, the Managing Director and Co-President of the JP Morgan Chase Institute, who will be our moderator. Thank you so much, Fiona. I'd like to welcome Treasurer Sarah Godlewski. She is the Wisconsin State Treasurer. Welcome to Kunal Kapoor, the CEO of Morningstar. And finally, welcome Nari Reid, Director of the Retirement Security Program at UC Berkeley's Labor Center. Fiona, I will go ahead and hand the reins over to you. Fiona, it's yours.
Nice to see you, Treasurer Nari, Kunal. So I think it's our job after that awesome history lesson to sort of bring us into today and think about, what has 2020 and 2021 revealed to us about financial security and the state of retirement. I mean, obviously, COVID really laid bare so many inequities in so many ways. Just if I think about the job loss, tens of millions of people lost income, jobs, disproportionately women of color. Those unemployment rates are slower to return among Black men, Black women, and the critical role that emergency savings played in helping people sort of smooth through these really treacherous waters. And yet, I can't even tell you, at JP Morgan Chase Institute, every chart we looked at, it was like, it's got to be a data issue. It's got to be, the dramatic shift in every indicator was sort of stunning for a data person. And some of those shifts were really ironic in some sense because, at the same time that we were all ordered to stay home, a lot of people cut their spending. The federal government stepped in with really unprecedented levels of fiscal support. We actually saw, checking account balances rise by 30-40% at the end of 2020. And so, and at the same time, of course, COVID really has laid bare just how steep those widening those wealth gaps are that have come to characterize our society. So as we think about those experiences and the many data points that I know you have all been tracking, the frame I'd love for us to engage with is just how can we think about retirement savings as the next big financial inclusion opportunity, right? As we think about an inclusive recovery from this pandemic, what role can retirement play in that? So Treasurer Nari Kunal, I want to open it to you and kick it off maybe with a more personal note from each of you to say, tell us a little bit about your job and why the issue of retirement is so important to you professionally and personally. So Treasurer Sarah, please start.
Well, thanks, Fiona, and it's great to be here, everyone. I chaired our governor's retirement task force, and when this all started, people in my state had been talking about retirement, but I don't think they really were fully aware of what a crisis we were facing. We had a report that was done recently that said, if we do nothing and allow the status quo to continue in Wisconsin, we will have over 400,000 seniors in poverty by 2030. And that will cost the state over $3 billion. And so this is not only the right thing to do, this is the fiscally responsible thing to do. And for me, it also was an issue, quite frankly, that was somewhat personal. I got my first job out of college, and when I turned 30, I started thinking, I haven't been saving for retirement, and I was really lucky because I did have access to a retirement plan, and I need to change that. And come to find out, I call my HR director, and she's like, Sarah, our company automatically enrolls you. So you had actually been saving for 7 years, and I was not behind at all. I was actually ahead of the curve because of my portfolio. So I think this just shows sometimes how even things that we've been talking about and advocating for are really front and center as we think about one's opportunities throughout the course of their lifetime to be saving. And I do just want to, Fiona, just say quickly too, when something that I know we're going to talk about is just how much I think what our task force started looking at before COVID changed, and I think became a much more comprehensive report after COVID. And I think, to me, that's what we need to start thinking about moving forward. And I really look forward to this conversation.
Yeah, that's super interesting. Well, I'll be sure to probe on those pivots. Nari, tell us a little bit about you.
Hi, I was just thinking about how I landed working on retirement issues. I started out working on a living wage campaign in Los Angeles when I was in grad school, working on affordable housing and income inequality. I had just done a postdoc at the UC Berkeley Labor Center, and the unions came to us and said, we're getting clobbered on public pension issues. We need you to start working on this. And so as we started developing the program, we realized that we can't just have the conversation about public pensions. It needs to be a conversation about broader retirement security. And that's why my work has always been split between those two pieces, which is expanding private sector retirement security and also preserving public pensions, which is sort of the last remaining bulwark in terms of middle-class retirement security, especially for Black communities. So that's been an interesting evolution, but I will say that personally, it's been interesting living some of these issues out. I have a mother who, we were on PBS NewsHour recently, who works in retail because her Social Security check just isn't enough. She lost her house during the 2008 crash, and was kicked out of the labor force because of the pandemic, right? Because it wasn't safe for her to work. And so sort of seeing this happen in my household, and I'm part of the sandwich generation, dealing with a young child who's in preschool, dealing with those issues, my own retirement and my mother's retirement income issues. So I do think that it gives me this perspective, right? Because I'm sort of living some of the data that I'm also looking at in terms of how inadequate the current system is and how much risk and how much burden this places on especially low-income workers, right? To do everything themselves, and the system just isn't adequate.
So interesting. And Nari, I love, it just underscores just how intergenerational an issue this is in many ways, how other financial issues, student loan is a huge intergenerational issue too, right? So Thank you for that. Kunal, tell us a little bit about your experience.
Yeah, no, absolutely. And thanks as well from my side for facilitating this important conversation. I think it's coming obviously at a really important moment because so much has been written in the past year about health security. And, you know, I think one of the awakenings for many folks has been that the link between health security and financial security is not nearly as diffuse as most people might have imagined. And much of the data, much of what we've learned in the past year reflects that the two are actually fairly heavily, you know, linked together. And so, you know, my passion and Morningstar's passion here is really around the fact that we can do better, that we can help more people, that the solutions are achievable, they're at hand. And, you know, we need to have conversations like this to make sure that they can come to life. I think, you know, in the financial services industry, it's often the case, especially if you are serving investors as we are, that you take for granted that everyone is an investor. And the newsflash is that everyone is not an investor. And so the question is, how can you at least get them to be somewhat engaged? And it starts, first of all, by doing things such as thinking about saving. It extends to things such as how do you engage with them so that it's more personal? How does something like ESG suddenly change the playing field and the equation through which you engage, you know, with folks who have not maybe had an interest? But I think the most important thing is that we have the toolkit. And the question is, can the toolkit be extended to help those who either have not been franchised to take advantage of it or those who don't understand how to take advantage of it? And the other day, when we were having a prep call, I was telling the story that when I started at Morningstar, I think I came in as an undergrad with maybe a little bit more knowledge than a typical 22-year-old about what happens in saving and finance. But even I didn't at that time have the, you know, thought process that I should take advantage of my 401k in the full way possible. I knew I had to do it and I knew I had to take advantage of it, but it took someone telling me at that time, just go ahead and do it, take the full match, do as much as you can. And I'm glad somebody did, because I probably would not have optimized it. And I think the other lesson is we all need financial mentors too, who can model the behavior and model the kinds of conversations that maybe don't take place in every home. And I think that that's an important learning as well from the last year. We've all gotten much better in our homes and at our tables talking about thorny issues, I think. And this is a thorny issue. And we need to get better around talking about it.
Yeah, so true. Speaking of conversations about thorny issues, I'd love to, let's pivot to talk about what we know about who does and who doesn't have retirement savings. And Treasurer, I understand you've been going on a listening tour across the state of Wisconsin and have probably had many thorny conversations. So maybe you can just read back some of those key conversations that taught you about, you know, how the retirement, you know, system is working, and who's in and who's out.
Yeah, Fiona, and I want to actually preface my conversations pre-COVID and post-COVID because I think it's very relevant even to this conversation. So when we announced the task force, I went on a statewide tour, and there were, I mean, one theme that was very clear is what we've all been talking about is access and savings. In fact, I'll never forget, I was at a town hall in southeastern Wisconsin, and a woman in her late 60s was there, and I asked her, well, you know, why are you here? What would you like to talk about? And she said, you know, I'm not here for myself. I'm actually here for my children. I have 3 kids in their 30s, and not one has access to retirement, whether they are part of the gig economy, they're self-employed, or their employer just simply doesn't offer it. And come to find out, I asked, you know, more people in the crowd if they had children and if they were seeing similar things, and they all kind of raised their hand. And so access became clearly a big theme that we were leaning in on. So at the beginning, we were really focused on how can we provide access to those 1 million Wisconsinites who don't have it, and also thinking about the next generation. But then when COVID hit, we as a task force got a little worried because, as Ida actually indicated earlier, we're like, is this more of a luxury as we are thinking about millions of Wisconsinites who are being underemployed and unemployed through no fault of their own? They're making ends meet to pay bills. How does retirement security really fit into this greater picture? And so I started making phone calls to get a sense of what Wisconsinites were thinking. And there was really two clear themes that came out. The first is that for those that did have retirement savings, they were so grateful because most of them were actually using it as emergency savings. And what I found so fascinating is that this wasn't just a trend in Wisconsin. This is actually a trend we've seen nationally as we now have looked at the data, and 60% had either borrowed or withdrew from their retirement account as a result of COVID. And then the other big thing that it flashed a light on was how, for those that didn't have a retirement account, how desperate they are to open one up as soon as they get back into the workforce, because they now realize how important this savings tool is. So that was kind of, Fiona, how our conversations further then wanted to start looking at emergency savings as a part of our larger retirement plan. I think the third thing that I also want to highlight, because it wasn't just also post-COVID, for us here in Wisconsin, we unfortunately made national news because of our Jacob Blake and what we've been seeing with just a justice system right now that doesn't work for everyone. And that also became to the table as we think about financial equity and how simply the playing field is not even for communities of color with regards to savings. And so that also became a big objective for our task force, is what can we look at, particularly in leveling the playing field and opening up a retirement account the day somebody is born so they can benefit from compound interest. So these are things that then I think really opened ourselves up to, we want to look at auto RIAs, and that absolutely has to be a part of our solution, but we need to do more than that, I think, to provide a comprehensive, financially secure recommendation moving forward.
Yeah. Kunal, you just released some really interesting data this week. Tell us what it showed about what's going on this past year and our retirement landscape.
Yeah, absolutely. I think the research that you're referencing is the research we've done jointly with the Aspen Institute's Financial Security Program, the University of Chicago, and the Defined Contribution Institutional Investment Association. I think we passed it around as well. So I think the bottom line that's really worth highlighting here is, and it's sort of, I think, reiterating a point we've been making, is that the impact of the pandemic was felt unevenly across society here in the US. So a few key points and takeaways from that study. One, that emergency savings, as Sarah was just saying, served as a financial lifeline for households who lost income during the pandemic, regardless of where they fell on the income spectrum. And I think that's an important point here to make. But having that prior emergency savings was really important when it came to topics such as debt management, regardless of what pre-pandemic income looked like. The second point that the study highlighted was that income played its strongest role when it came to emergency savings. Households that were in the lowest income tier had almost no emergency savings in 2019. And we think of this group as those who are unbanked or have less than $100, whereas households in the highest income tier reported holding approximately $17,000 in emergency savings. So quite a big gap in that context. And lower income households were twice as likely as a result to dip into their retirement savings when they had them available due to COVID. The third point that the study highlighted was that pre-existing differences in financial health by income and race continued and were even more manifest during the pandemic. So respondents to the survey, said significantly higher household incomes. Those respondents who had significantly higher household incomes, retirement savings, and emergency savings in 2019 did a lot better. And so what we found as we dug into this data was that Black households were least likely to have a 401k in 2019 after controlling for other factors. And among those who did have those accounts, white respondents held approximately twice as much in retirement savings as those of Black and Hispanic respondents in 2020. We also saw that Black households were approximately twice as likely as Hispanic or white households to be unbanked in 2019. And the data points towards a major decrease in unbanked Black households from 18 to 12%, and an impressive growth in new workplace retirement account openings. 6% of white and Hispanic households moved from not having an account to having one in 2020, and 16% of Black households did. So there was some positive movement in that context. And then the final point that I think I can quickly highlight here is one that I think we should spend some time talking about today, which is that student loan and medical debt are major warning signs for trouble ahead, especially for lower income families. And they're far more prevalent than what is often discussed, which is the payday loans. So low income households had the highest student debt to income ratio, suggesting, of course, that the necessity for a lifeline to help these households is incredibly important. And school debt in particular was largely, while it was largely held by higher earners, they also had the ability to pay it off more significantly than those at lower income tiers. So low to moderate income households had the highest school debt to income ratio in both 2019 and then again in 2020. So when we talk about the differences in society and everything that has sort of been laid bare in the past year, it really kind of comes out in the study in a meaningful way.
Yeah, I mean, and just how integrated these different pieces of the financial picture are, it's pretty stunning. I mean, one thing I was really struck by that work was just the surge in people with bank accounts and financial inclusion. I mean, I know you probably can't say much more about why, but I'm trying to connect a dot between that and the big surge we've seen in card not present spend, online spend. And I just wonder, is there something about us all having to transact remotely that is causing people to enter into the banking system who might not have otherwise? It's an important movement like you were saying, Kunal, in the beginning, about just like, it's like the front door, right? You can't be an investor if you don't have a bank account, right? So it's an important front door.
I would just quickly
please
venture a point here, which is that it's also the friction for opening a bank account is much lower. You don't have to walk into a branch.
Yes.
You don't have to sign pages and pages of documents. And that's perhaps something for the retirement industry to ask itself as well. How do you take away some of the friction associated? And what do we learn from the banking industry in that context? One thing we found at Morningstar, for example, when people are signing up for a managed account and a retirement account, one of the places that they drop off is all the disclosure language because it's so overwhelming. And the question is like, why do we start by hitting people with pages and pages of disclosure language when you want to hit them with information that will actually help them become savers? And I think the banking industry has done a much better job in that context.
Yeah, so interesting. Nari, I want to turn to you. I mean, if I think about the segments of the population who were most dramatically hit by job losses, it was gig workers. It were people who are working part-time. It's people's in industries like hospitality, retail. And these are segments of the population I know you spent a lot of time thinking about and studying. So tell us a little bit about your perspectives and maybe points of light in terms of how we might, what's the current landscape? What might we do about it in relative to these workers?
Yeah, it's been a really interesting year, to say the least. So just have a few points I want to make. I think in 2020, what we saw was, right, it's not just about whether or not you have a retirement account. It's really about the entire system underlying social insurance and financial security and economic security. So, for instance, what happened with women, right? And increased rates of unemployment among women, and due to the, right, what was happening in childcare and the loss of childcare, and and the childcare industry is imploding right now, and then at the same time, oftentimes like having to take care of seniors in their households who maybe didn't feel safe bringing care workers into their homes, and that has long-term repercussions, both in terms of their earnings, right? It's probably going to be a decade or lifelong sort of downward pressure on their earnings, right, and their retirement accumulations. So that's one piece. And then I think about sort of what we saw and didn't see in terms of government stepping up to expand these social insurance systems. So one example is pandemic unemployment assistance, right? Where, self-employed workers, including gig workers, who were not eligible for all kinds of benefits, all of a sudden government realized, oh, we need to actually pay attention to this group and create a program just for them. And incidentally, I was encouraged to see this week, Senate Democrats, Whitman and Warner and some other people dropped an unemployment insurance reform bill, which has got all kinds of interesting things in it, like inclusion for unemployment insurance purposes of self-employed workers, right, by the companies that pay them. So unless they, using the ABC simplified test that California passed before Uber and Lyft just overturned it. So I'll save that for later, but it brought up all kinds of questions about the policy choices that we can make about who gets benefits and who doesn't. And at the same time, a lot of people were left out, right? It was great to have these supercharged unemployment benefits, both for the regular system and then the PUA. But in California, right, huge group of people, undocumented immigrants, were left out. And the states just don't have the fiscal mechanisms to actually provide adequate benefits, right? So California, I think, did a benefit of a few $100s, right? Which is really just nothing compared to the extent of the need, especially given that these were the workers who are most likely to be infected by COVID, right? Most likely to be economically displaced. And then finally, kind of going back to retirement, older workers, right? So we have this, we've been encouraging people, work as long as you can, right? Delay Social Security claiming so that you can maximize that benefit. And we saw, unemployment, higher unemployment among older workers who were basically by policy, right, pushed out of the labor force because it wasn't safe for them to be in sectors like retail, right, or in gig work as Uber drivers or whatnot, where older workers tend to be concentrated, right? They're concentrated in service jobs. So, and so that's going to have, again, like very long-term consequences for the workers who had to dip into Social Security earlier than planned because they're getting reduced benefits. So I think that it highlighted sort of opportunities and the fact that it's really a matter of sort of policy, right? Government policy, social policy, and political will, whether or not we provide adequate benefits to certain groups of workers.
Yeah, I mean, this moment of government intervention, right, through the CARES Act and subsequent fiscal rounds, I mean, it's been unprecedented relative to other recessions. And the level of innovation and it, sets up all of these sort of policy experiments, right? And, the PUA program that you talk about, it is set to expire in September, and but it was a really bold and very important. I mean, at one point, I think it was representing roughly half of the UI claims. So this wasn't just a small add-on; it was a major add-on, right? In terms of, and that's partly because who was experiencing the job loss, but also, the need. So I think it's really interesting. We're in a very interesting moment with obviously change of political winds, administrations, and opportunity to, there's really clearly an appetite to think boldly about policy. Nari, I want to maybe ask you to, was there anything really surprising that the pandemic revealed to you about household financial security that we ought to like really bring forward or just reflect on as we think about reforming our retirement systems?
This is a little bit meta, but it's just one of the things I've noticed is that what is sort of politically good policy is not necessarily in line with the most technocratically sound policies, right? So these stimulus checks were really popular, and so it's interesting to see the Biden administration sort of departing from the Obama administration strategy of doing these like very technocratic solutions, like the payroll tax cut, so that people would spend the money and not save it, but it was invisible, right? To try to build support for these programs by doing stuff that maybe economists would think, well, that's not necessarily efficient, giving everybody, large checks that then go into savings accounts, right? And go to some of it goes to people who really don't need the money, because it creates political support. So I think it sort of raises questions about how to do these programs and reforms in a way that creates broad support. And that's just as important as the technocratic, right, soundness of it. And so we've learned a lot in the last decade about auto enrollment and auto escalation, all of these great things that I think are going to be a really big part of the national solution. But we need to sort of think about how to politically structure programs in a way that they have broad support, because a lot of people have, right, skin in the game, as opposed to saying this is just for this marginalized group of people, right? And those programs tend to just get a lot less political support.
Treasure, in many ways, that's the needle you're constantly trying to thread, right? In terms of like what's politically feasible, how do we get the support? How do we make the case for retirement savings at all, right? If in the grand scheme of our hierarchy of needs, it feels like there are so many people who are struggling to pay, basic things like Kunal's talking about, medical debt, student loan debt. How do we think about this? How have you thought about that and maybe baked that into the way you approach this from a policy perspective?
Yeah, so I kind of think about it as there's three separate parts to this. I mean, the first is, if you think about it in politics, you also only have so many political chips you can use. And so how do you actually get people to want to use their political chips on an issue like retirement security? And I think part of what we have to do with that is just reiterating the problem and how this is not just, again, a luxury. This is a crisis if we don't do anything. I think the second big thing comes down to this constant kind of fight between we have to do what is right and we have to do what's fiscally responsible. And I think what I have really embraced is they're not mutually exclusive. You can actually achieve them both. And I think that's also something that we really leaned on in my work for our retirement task force. I think, did a good job, because when we started, I don't think anybody had any idea that by doing nothing in less than a decade, it was going to cost the state over $3 billion, which is way more than what we're already paying on our current senior programs. And so it was really elevating that. But at the same time, when you talk about of a population, like we have 1 million that simply don't even have access to retirement, and that is one of our challenges, I think we were getting support on this. So to me, it's kind of, how are you framing it? And then how are we developing these policies that are both financially secure while making sure they get to people in a way that's meaningful?
I'd love you to just dive one more level deeper on this, what it sounds like you were making kind of a cost benefit argument in favor of this approach. And, in what sense was this costing more? I mean, because you often hear the claim that, well, Social Security is enough, right? That we have a program for this. What was the case you were making? What was that extra cost that you were saying would be averted if we did nothing?
I mean, it was pretty simple for us, because in Wisconsin, the average income is under $1,400 a month. And we know that seniors in our state can't live off of $1,400 a month. So it was kind of talking about, we have this very complicated 3-tier system. And right now we're putting a lot of weight on Social Security, and we know $1,400 isn't going to cut it. And that's why we're seeing an increase in whether it is, I mean, I was talking to seniors about how they were skipping taking their prescription drugs because they couldn't afford it. And this goes back, I think, too, to the interconnectionness even with health and with how much we are saving. But it was, I think, setting it up in a way to let people know that we have to do something more. And by just thinking through just smart, even investment practices, I think that we can do this in a way that is fiscally sound and also meets a significant need for the state of Wisconsin.
So interesting. So let's talk about what an inclusive and effective savings systems could look like. What features does it have? You know, what are the, maybe we should get, you know, kind of technocratic for a minute here, given that we have the experts on the line. Kunal, I'll start with you. So what do we need in order to have an inclusive and effective savings systems?
Well, that depends on how much time we have.
I think we have about 20 minutes or something.
Yeah, no, I think I think there's many solutions, and there's not necessarily a one-size-fits-all solution. But as Sarah and Nari both, you know, talked about, I think starting with accessibility is job number one, right? Like I think accessibility and education are kind of where you draw the starting line, and then you build, you know, from that part of it. And I heard many different ideas offered up that I'll just kind of reiterate that we think are valuable and helpful. So I'd start with access for certain. There's really big gaps in retirement plan coverage today, especially, as you know, among smaller companies. So about 51% of workers at small companies have access to a retirement plan. That means almost half of people do not. And so we're hopeful that things such as, you know, PEPs will help close the gap, as well as auto IRAs that have been talked about, but they're not a silver bullet, and they need to be done at much larger scale than, you know, what they've, you know, been done so far at. We also think that helping people with a secure in-retirement experience is just as important of a puzzle piece as getting them to save early. And I don't know if we'll get to talking about that, but even where you know, the discussion shifts with what do you do once you're in retirement, we need better solutions. So whether that's in-plan annuities, allowing participants to keep assets in the plan after they've retired, or even just helping them think about how they draw down things, those are very, very important things. On the other end of the spectrum, we think that there is a need to engage people when it comes to their investments. And I think part of the reason that retirement feels so far off for people is because they're not naturally, you know, folks who think about investing. And I think this is a really important point, and I was trying to make this at the start, because everyone in the financial services industry who's involved in this thinks like an investor, and they sort of get it, and they like to do it themselves. But the truth of the matter is most people don't have the time to dedicate to becoming investors. And so how do you make it easy for them? I think you make it easy through technology, as we talked about. I think you make it easy through things such as managed accounts, low-cost managed accounts, or target date funds. I think those are really powerful solutions. And I think most importantly, you start to use new tools that are becoming available. And we think ESG is one of the most powerful new tools that's emerging to start to engage folks, because there's this sort of myth that young investors are the ones who care about ESG, but our data shows that it's actually universal. And when you start to talk to people about what they could do with their money and how they could use their money to perhaps influence outcomes, their engagement on that front tends to change quite a bit. And when people are engaged, they tend to stay the course. They tend to do the things that are normal to, you know, a healthy sort of long-term savings plan. And you want to start encouraging behavior like that. One of the things that I've been most encouraged with, and I'll kind of end here, is that once you get people into a plan, generally speaking, and you get them into a habit of contributing on an ongoing basis, they tend to stay the course as well. Our data actually shows that last year, Most people in a managed account didn't make significant changes even when the markets were falling last March. They just stayed the course. And as you know, Fiona, that was the right call. And there's this mythology that exists that Wall Street is smarter than Main Street, and that you have this notion that when, Main Street gets involved, it's the dumb money. Well, the reality is most of the money that you see traded on markets most days is controlled by professionals.
Mm-hmm.
And the money that's staying the course is from Main Street. And so Main Street is not dumb. It's actually the smart money. And when people are empowered and they are taught to engage with their investments, they're taught to do simple things like stay the course, they win. And we need to start trusting people to do the right things for themselves and sort of lose this mentality that Main Street is dumb, because it's not. And our data kind of bears out that investors in managed accounts have actually proven to be quite successful.
Well, Kunal, that's a super interesting perspective. So if that's a private sector perspective, Treasurer, tell us what, in a very purple state of Wisconsin, what is the solution visioning in your state?
Yeah, and I actually just want to kind of continue from Kunal in this Main Street concept, because I think that was something that was really powerful for us when we would reach out to small businesses. And it's not that small businesses didn't want to offer retirement security. I mean, we heard stories over and over about how they would call retirement agencies and they would not call them back because they either weren't big enough, or they weren't going to generate enough money, or they weren't worth their time. And so it became that, look, like, we really want to offer this plan, but because of barriers, we can't. And then I think we were able to even generate an additional argument, which is, look, this is a competitive argument, because if we don't provide our small businesses in Wisconsin with this benefit, they're going to go to other states. Like in Wisconsin, we've been experienced, for an example, a brain drain. We want to bring all the young talent that we can, but if they're looking at retirement and their small business isn't able to offer it, but Illinois is, for example, that's putting us as a state at a competitive disadvantage. So it became another kind of interesting way of looking at this and just talking about how to talk about this, I think, in a different way. The other big thing, Fiona, that I will say that I was really surprised about is the bipartisanship that we were able to achieve with our conversation about our 401 Kids program, and also how we kind of incorporate it actually as part of a retirement solution. And so we have structured this recommendation in a way that every kid in the state of Wisconsin would get an account the day that they are born. And then we have recommended that for low-income individuals, it's actually seeded with a certain amount. And then over time, that would be invested in the same way as our retirement. It would be put in an index fund. And we talked about how this would be a tool then that folks can actually use when we talk about financial literacy. One of the challenges we know here in Wisconsin is they don't have the tools to actually experience it. So this could be a tool that they could learn more about it, but at the same time also benefit from compound interest, because those individuals that aren't necessarily able to continue to contribute, the day that having 18 or 20 years could really make a difference. And the question, we were worried that we were going to get pushback when we proposed this recommendation, but it was universal. I mean, folks on both sides of the aisle is like, this is a no-brainer, because we can also manage this in a sustainable way. Just like we're able to manage smart retirement plans. So that was, I think, a win-win example of kind of providing more financial inclusive-ness in putting forth a recommendation.
Yeah, and could I just add there that, we actually examined income-based, what an income-based baby bonds program could do. And we found that with baby bonds, median Black families have 96% less in wealth per minor child than median white families. And with baby bonds, median Black families would only have 56% less in wealth per minor child. So it's pretty significant in that context. And we think it's a good idea as well.
Well, I'll just also quickly offer, we heard information too about this, even from our farming community, because what they were telling us is that income for them isn't consistent. And so a program like this would be really helpful to a lot of rural families in Wisconsin as well.
Nari, I want to bring you in to help us think about doing, what would you love to see in a state program? And you have experience with, CalSavers, et cetera. So I'd love to hear your experience with that. But also, do we need a national approach? What's missing in the existing frameworks that would make these systems ever more inclusive?
Okay, great. So first of all, I want to say I'm a big cheerleader for the state programs, because I've been involved with them for a while, and it was really just amazing to see states step up, right, in light of federal gridlock, right, and just taking the initiative and saying, we're just going to jump in and do this and make this happen. And often in a situation where it wasn't clear if the regulations were there at the federal level, they just went ahead and did it. And I think that was really bold. So I think at the state level, I think Oregon has got a good model in terms of they have the broadest coverage, right? So it includes a lot of part-time workers. It's got the smallest firm size threshold. So I think it's got the broadest coverage. And I think that's something that other states sort of need to be looking towards, which is right now California's at 5, which is not bad, but it doesn't cover, say, all the workers at Walmart who are, work part-time, and they just don't get the corporate benefits, right? So, so there's still a coverage gap there that it would be nice to see closed. And then I think, a big piece that's missing just because of the regulatory context is the employer contribution piece. And I think that's actually one of the reasons that we need to be looking at a national system. And then what that also kind of opens the doorway for is, I think, broader coverage, especially in terms of the self-employed portion. So when I'm in conversations with a lot of different groups of sort of, people of sort of precarious employment status. So for instance, home care workers who are individually employed by the people they provide services for, who if they're paid for by IHSS, the state program, Medicaid program in California, then they at least have an employer of record. But then there's a whole bunch of people who don't have access to that because that's not how they're paid. There are house cleaners, right? So these organizations are trying to figure out, how do we even do contributions in the context of a 1099 or even no documented paper trail type of payment relationship. It gets very very hard. And I want to highlight sort of the system in Australia with a superannuation program, where they say for the purposes of superannuation, basically firms have to pay for even independent contractors who primarily work for them, right? Who either solely or primarily work for them. And they're responsible for making those contributions. And so once you sort of center the contributions in the firm, as opposed to figuring out how to get the contributions in from, millions of contractors, it just gets to be a lot easier and more efficient. And then the other piece I want to uplift from California is that it's not just about the retirement savings program. It's also about the fact that California has been raising its minimum wage, right? So in the next couple of years, everybody's going to be at $15 an hour, and then indexed to inflation after that. And so that combined, right, and that has a huge impact for the bottom, 20 to 40% of the earnings distribution. And that combined with CalSavers is going to increase retirement income potential by 50% compared to what they would have had without these two policy reforms. And so we really need to address the income inequality, earnings inequality piece in tandem with the access piece.
So go ahead. I just want to add
a few to what Mari said. I think one, just to share that while I am in support of a national program or public option, I will say there is a motivating factor as a state to try to get ahead of it so you can drive your own program rather than potentially being told by the federal government what to do. So there is a motivating factor to that. I think the other piece too, when we talk about these state auto RIA programs that I really think we need to elevate as a community is the opportunity for partnership. We know a lot of times in these programs where the costs come for states is setting it up front. But if we would join, for example, a partnership with Oregon Saves, it's a win-win opportunity. We don't have to pay those startup costs. They have more assets under management, so the fees go down. We can have better returns. And so I think we've got to start thinking about this too, maybe similar to how the 529 plans have been modeled. And rather than always having to go your own way, allowing people to pool together to make it better and more financially palatable for the state, at the same time providing the same benefit. And then I guess just the third thing I want to also just emphasize, and kind of again building off of what Nari said, in addition to the kind of income inequities, it's critical with these plans to build in an emergency savings feature, because I think what we have seen is that it's got to be the more seamless we make this whole kind of financial experience, I think the better we are setting people up for success. So if they had to have a special emergency savings account and this retirement account, but we're still just trying to get them to automatically save, it becomes a bit complicated. And so just a one-stop shop, our experience to do that, I think is setting our population up for better long-term success.
So interesting. I feel like I could go on and on with each of you. I mean, Nari, one thing that that is so important to maybe think about in the context of a business cycle, right, is just the amount of churn in the labor market, right? People are losing their jobs. Some of them are getting recalled back to their old employer, but of course, many of them are not, and they're pivoting. And so when we tie, retirement to employers, how do we think about that labor market churn? I don't know if you have a quick idea on that.
Well, I think, so one of the points I always want to make about portability is like the most portable retirement system is Social Security, right? So there's something to be said about having a sort of a publicly sponsored program, because it gives you the coverage and the scope and the portability that individual employer plans don't necessarily have. So I do want to say that I don't necessarily advocate for just completely displacing like 401k system, but I do think that there needs to be we need to recognize that it's a very partial system, and that we need to provide a base layer, a minimum standard in terms of what everybody gets into, and then employers can improve on that on their own if they want to. So yeah, I just think that we need to leverage the public systems that we have, because that is what gives us the greatest opportunity for universal coverage.
That's great.
Yeah, I would just say the technology is in place for portability. And historically, the argument against it has always been one around technology. And we're using technology in all parts of our lives to solve all kinds of problems. And to kind of go back to the early data on banking and more people having bank accounts, I think it's because we've solved a lot of problems about how people get access in an easy way to a bank account. And I think that can be done in the retirement space as well. There's a whole host of interested parties who kind of are in the back office, middle office, front office. And I think because of their interests have sort of tried to keep one piece or the other together. But I think a lot of that is kind of coming apart now as we have more open technology. And so we have a great opportunity to allow portability by starting to take advantage of the technology that's available. And so, I would just say that it's worth keeping in mind that when people tend to stay with the plans that they have, often they're staying with lower cost, more diversified options than typically where they are moved to. Or more importantly, if they're having to move, do they just see it as an opportunity to close out the account, either because they don't want to deal with a small balance or because they don't want to deal with multiple accounts? So those kinds of things can really become issues in terms of long-term success.
Yeah, well, let's close with a lightning round, if you will, and come back to our original question on, if you had to lift up one idea that you think would really make retirement savings the next big financial inclusion opportunity, what would it be? Kunal, I'll start off with you, and then Nari, and then Treasure.
Sure. I think, we've talked about a lot of good ideas, and so I don't want to necessarily pick one over the other. But I will say that I believe in auto enrollment is a very effective strategy. And so I think giving everyone access through auto enrollment to a managed account right out of the gate at a low cost is a pretty effective tool, and something that I would look to do. We didn't talk about it as well here, but if you gave me a second option, I would also just say that because so many people's retirement savings are disrupted by health issues, that trying to think about health savings account and the future of how those play into linking up with retirement accounts is important. It's a different topic, but I just want to mention it because
Yes.
we didn't talk about it, and I do think it needs airtime.
Nari.
Well, I'm encouraged by the number of states that have caught on to the idea that there need to be these sort of much broader access to retirement programs, and that they can play a role in that. And states have often taken the lead in initiating policies that then get nationalized. There used to be state level Social Security programs, for instance, right? So I think the biggest thing that I want to highlight is that maybe this is a moment finally to really start thinking about some sort of national framework, right? Whether it's clear regulatory clearance for the states to do something, or a set of standards that I do think that there's some role for the federal government to play in actually making sure that we don't just have a patchwork system, that we get some sort of national coverage. And hopefully one that extends not just to traditional W-2 employees, but all workers.
Yeah, Treasurer, take it home.
Yeah, and I think maybe just bringing all of these ideas together, I think when we think about financial security, how can we do auto enrollment the day somebody is born? And then how can we create then as a result this holistic financial system, I think to Nari's point, because we've enrolled somebody into whether it is a banking account the day that they are born. I think that's where we're going to see political interest. We're going to see at least pushback. And I think there's a lot of buy-in and will help us create that more long-term financial secure system.
Awesome. Well, I want to thank you, Reid, Treasurer, Nari, Kunal, thank you so much. We've covered a ton of ground, but I'll hand it back to you, Karen.
Wonderful. Treasurer Sarah, I don't know if you saw the quick Go Pack. There's a little Packers reference for you.
Oh, no. We can't go there. Go Bears.
Oh, man. Thank you so much to all of you for joining us today. That was such a fabulous conversation. And so I'll just go ahead and transition to the next brief set of remarks. You guys are welcome to leave the Zoom stage, as it were. So Kunal actually did a really terrific job of seeding some data that I just want to highlight for all of you. And I am going to take the sort of MC prerogative here because I had the privilege of working very closely with not only my colleagues here at the Aspen Financial Security Program, also Steve Wendell and Stan Traeger at Morningstar, Lou Minsky and Warren Cormier at DeCia, and Angela Fontes and her team at NORC. Essentially what happened was about a year ago, if you can remember back that far, which now feels like a decade, things were changing rapidly, and it became clear that millions of Americans were going to be very deeply and suddenly impacted with income loss. And so we wanted to understand how would American households cope with income loss. What would they do? Where would they turn? And what would that tell us about the way that households leverage different resources, right? Emergency savings, retirement savings, different debt strategies. And what would that tell us about the design of a system? I think what we heard in that panel, what I heard was just how deeply interconnected the different pieces of our financial lives are, and how hard it can be to solve for them in a silo. And so that's what we set out to understand. So I'm not going to repeat everything Kunal said, but I want to point you in the direction of some highlights that really speak to us here at the Financial Security Program. So we worked with the NORC AmeriSpeak panel, which is a nationally representative sample of American households. We surveyed them in late December 2020 about a whole battery of questions about their financial lives. And luckily, because it's AmeriSpeak, we also had a lot of that same data from 2019. So we could compare what happened, what was going on in their lives right before the pandemic, and then what had really happened since. And I think what is unique about this data set is that we have data on the flows, right? The cash flow in a household. We also have a lot of detail about the assets and different kinds of debts. So not just the income statement, but the balance sheet of a household, sources of income, job status, We were able to use the financial health networks, then health score, and then demographic information. So we have all of this data by race, gender, income, et cetera. And I just want to point, a lot of what we do here at the forum is try to signal where we think we need to be turning our sights in the future. So if we look to the next slide, one of the slides or one of the pieces of data that we think is so interesting, in addition to the protective power of emergency savings, which Kunal touched on, and to the way that low-income households were more likely to tap into what retirement savings they had, if any, really kind of honing in on this kind of interesting connection between different specific forms of debt and retirement savings balances. I think it was 2 years ago at the forum, we invited the really innovative folks from Abbott Labs to come talk about what they were doing, that the private letter ruling they had gotten from the IRS to be able to match, to deposit a 401k match into the accounts of employees who were contributing a certain percentage of their income to pay student loan debt. And so I think we're starting to see data here about the correlation, right? We see that possession of student loan debt correlated with 36.4% lower retirement savings balances, and medical debt associated with 26% lower workplace retirement savings balances in 2020. And so, as we think about whether it's hybrid solutions or policies and products that help people kind of solve for two needs at once, I think that the data in this study that we're super, super proud of and excited about this data, I think can really be directional for those policymakers and product designers out there thinking about how we can build systems that reflect the true integrated nature of our financial lives. So again, we encourage you to engage with that data and download. And I think we are ready to actually go to the break. So a few housekeeping notes before we go. We are going to reconvene here at 1 p.m. Eastern. You won't see me, you'll see my colleague Tim Shaw, who will be our MC for the afternoon. Please use the same link to re-enter the event at 1 p.m. And if you have any tech issues, you need help, please do email my colleague Raquan Wedderburn. Her email address is here with any questions. Thank you so much for joining this morning. Thank you so much to our speakers for sharing their time and wisdom and expertise with us. And we'll look forward to seeing you in the afternoon.